What if the silver market is sitting on the edge of the biggest financial surprise in modern history? What if the price that most investors see today is not the real value of silver at all? And what if two major CEOs, people deeply connected to the precious metals industry, are now openly debating whether silver could actually reach $500 per ounce? Welcome back to Pulse of Silver, the channel where we break down the biggest stories, strongest trends, and most important warnings in the silver market. Today's discussion is one that has investors around the world paying close attention, because when industry leaders begin talking about triple-digit silver prices, it means something serious may already be happening behind the scenes. For years, silver has remained one of the most ignored assets in global finance. While stock markets exploded higher, technology companies dominated headlines, and cryptocurrencies captured attention, silver quietly stayed far below its historical potential. But according to several mining executives and market analysts, this long period of silence may be coming to an end. The reason is simple. The world is consuming more silver than ever before, while at the same time, supplies are becoming harder to find. One CEO believes the market is massively underpricing silver because investors still think of it mainly as jewelry or coins. But silver is now becoming one of the most important industrial metals on Earth. It is used in solar panels, electric vehicles, military technology, medical equipment, artificial intelligence systems, and advanced electronics. Every year, demand grows stronger, yet silver production struggles to keep up. This CEO argues that if industrial demand continues rising while physical supply tightens, prices may eventually shock the entire financial system. The second CEO takes a more cautious position. He agrees that silver is undervalued and likely heading much higher in the years ahead, but he questions whether $500 silver is realistic in the near term. According to him, markets do not move in straight lines. Fear, government intervention, and investor psychology can delay even the strongest bull markets. He believes silver could still rise dramatically, but reaching $500 would likely require a major global financial crisis or complete loss of confidence in paper currencies. What makes this debate so important is that both executives agree on one thing. Silver is becoming increasingly difficult to ignore. Central banks around the world continue printing enormous amounts of money. Government debt levels are reaching records never seen before. Inflation continues hurting households across the globe. At the same time, trust in financial institutions appears weaker than ever. Historically, precious metals perform best during periods of economic uncertainty, and many analysts now believe the next decade could become one of the strongest environments for silver in modern history. Another major issue driving this conversation is the growing gap between paper silver and physical silver. Large financial institutions trade enormous amounts of silver contracts every day, often representing metal that may not physically exist in vaults. Some experts believe the paper market has artificially suppressed silver prices for decades. If investors suddenly demand large amounts of physical delivery, the market could face a serious supply shock. This is one reason why some analysts believe silver prices could move much faster than most people expect. Right now, many retail investors are asking the same question. If gold continues rising and industrial demand keeps expanding, could silver finally break free from years of price manipulation and enter a historic bull market? That question is exactly why this debate between two CEOs has captured so much attention across the precious metals world. Because whether silver reaches $100, $300, or even $500, one thing is becoming clear. The conversation around silver is changing rapidly, and the market may never look the same again. The idea of $500 silver sounds unbelievable to many people today, but history shows that financial markets often move in ways that seem impossible before they actually happen. Few people believed gold would ever pass $2,000 an ounce. Very few expected housing markets to explode the way they did after the financial crisis. And almost nobody imagined governments around the world would print trillions of dollars in such a short period of time. Yet all of those things became reality. This is exactly why some silver analysts believe investors should not dismiss extreme price targets too quickly. The first CEO in this debate argues that silver is entering a perfect storm unlike anything seen before. According to him, the world's economy is becoming more dependent on silver every single year. Green energy policies are increasing demand for solar panels at record speed. Electric vehicles require significantly more silver than traditional gas-powered cars. Data centers, advanced chips, and modern communication systems also rely heavily on silver because of its unmatched electrical conductivity. At the same time, silver mining faces major problems. Many high-quality silver deposits have already been exhausted over the past several decades. New discoveries are becoming more rare, and mining costs continue rising because of inflation, energy prices, and government regulations. In many cases, silver is produced as a byproduct of mining other metals like copper and zinc. This means silver production cannot quickly increase even if prices rise sharply. The supply side of the market simply does not have enough flexibility to meet sudden demand shocks. The CEO supporting higher prices believes this imbalance could eventually create panic buying. He explains that silver is a relatively small market compared to stocks, bonds, or even gold. Because the market is small, it does not take massive investment flows to create large price movements. If institutional investors begin moving serious money into silver, the available physical supply could disappear very quickly. He also points to the growing distrust in fiat currencies. Around the world, governments continue accumulating enormous debt levels. Interest payments alone are becoming a major financial burden for many countries. Historically, governments dealing with excessive debt often choose currency devaluation as a solution. In simple terms, they print more money, which reduces purchasing power over time. Precious metals like silver and gold have traditionally acted as protection during those periods. The second CEO agrees with many of these concerns but warns investors against becoming emotionally attached to extreme price targets. He says silver markets are known for volatility and manipulation. Large banks and trading firms can create major short-term price swings that scare retail investors out of positions. He believes silver may absolutely outperform most assets over the coming years, but investors should prepare for painful corrections along the way. Still, even the cautious CEO admits that current silver prices appear disconnected from long-term fundamentals. He believes that if inflation remains persistent and global debt problems worsen, silver could enter a powerful multi-year bull market. While he stops short of confidently predicting $500 silver, he does acknowledge that under the right economic conditions, prices could rise far beyond what most investors currently expect. This debate highlights something important happening inside the precious metals industry. Serious executives are no longer debating whether silver is undervalued. They are debating how high prices could eventually go. That shift alone tells us the market may already be entering a completely different phase. One of the biggest reasons silver continues attracting attention is because of its unique position between industrial demand and monetary value. Gold is mainly viewed as a store of wealth, but silver plays two critical roles at the same time. It is both an industrial metal and a precious metal. This creates a powerful combination that few other assets can match. During periods of economic growth, industrial demand for silver increases because factories, technology companies, and energy projects consume more metal. During periods of financial instability, investors often rush towards silver as a safe haven asset. In other words, silver can benefit from both expansion and crisis conditions. This is one reason why many analysts believe silver may outperform gold during the next major commodity cycle. The CEOs debating $500 silver both agree that the energy transition is changing the market permanently. Governments around the world are investing heavily in renewable energy infrastructure. Solar energy alone consumes enormous amounts of silver because the metal is essential for conducting electricity efficiently. As countries race to expand clean energy production, silver demand may continue climbing year after year. Artificial intelligence is another major factor entering the conversation. Modern AI systems require massive amounts of computing power. That means more data centers, advanced semiconductors, and electronic components. Silver plays a key role in many of these technologies because of its superior conductivity and reliability. While many investors focus only on AI software companies, some analysts believe the hidden opportunity may actually be in the raw materials powering the technological revolution itself. The bullish CEO believes the market has still not fully understood how fast industrial demand could grow over the next decade. According to him, silver inventories are already tighter than many official reports suggest. If governments continue pushing aggressive green energy goals while investors simultaneously begin buying physical silver for wealth protection, the market could face a historic shortage. He compares the current situation to a pressure cooker slowly building steam. For years, paper trading and market manipulation may have kept prices artificially low, but eventually physical reality takes control. If large industrial users begin competing directly with investors for available silver supply, prices could rise extremely fast. The cautious CEO does not completely reject this scenario. However, he reminds investors that financial markets are heavily influenced by politics and central bank actions. Governments and financial institutions may attempt to stabilize markets during periods of panic. Regulations, trading halts, and policy changes can all slow down major price movements temporarily. He warns that investors expecting overnight riches may underestimate how difficult and emotional precious metals investing can become during volatile periods. Another important issue is public awareness. Most people still own little to no physical silver. Many younger investors focus more on technology stocks, digital assets, or real estate. But market sentiment can change very quickly during financial stress. If inflation accelerates further or confidence in banking systems weakens, public interest in tangible assets could rise dramatically. This is why some analysts believe silver may eventually experience a retail investment wave similar to previous commodity booms. Once mainstream media begins discussing silver shortages and rising prices daily, investor psychology could shift rapidly. Fear of missing out often drives markets higher during the final stages of a bull run. Right now, the debate about $500 silver may sound extreme, but major market moves always appear unrealistic before they happen. The real question investors are beginning to ask is not whether silver can rise significantly, but whether the financial system itself is entering conditions that could make such price targets possible. There is another side to this debate that many investors overlook, and it involves the relationship between silver and the global monetary system itself. Throughout history, silver was not just an industrial metal, it was real money. For thousands of years, civilizations used silver coins for trade, savings, and protection against economic uncertainty. Even today, many investors still view physical silver as insurance against government mistakes and financial instability. The bullish CEO believes the world may be approaching a major monetary reset. He argues that central banks and governments cannot continue expanding debt forever without serious consequences. When countries accumulate massive debt levels, they eventually face difficult choices. They can either reduce spending sharply, raise taxes aggressively, default on obligations, or continue printing money. In many cases throughout history, governments have chosen currency debasement because it appears politically easier in the short term. This is where precious metals become extremely important. Unlike paper currencies, silver cannot be created endlessly by central banks. Physical supply is limited by mining production and natural resources. Because of this, some investors believe silver represents a form of financial protection during periods of currency weakness and inflation. The CEO supporting higher silver prices points to growing signs of instability in the global economy. Banking problems, rising geopolitical tensions, inflation pressure, and slowing economic growth are all creating uncertainty. According to him, confidence is one of the most important foundations of the financial system. Once people begin losing trust in governments, banks, or currencies, they often move toward tangible assets. He also believes silver remains dramatically undervalued compared to gold. Historically, the gold-to-silver ratio has fluctuated significantly over time. At certain points in history, silver dramatically outperformed gold during precious metals bull markets. If silver were to return closer to historical ratios while gold continues climbing higher, the price potential for silver could become enormous. The cautious CEO agrees that silver has strong long-term potential, but he warns against assuming history will repeat exactly the same way. Modern financial systems are more complex than ever before. Governments now have powerful tools to influence markets, including digital currencies, monetary policy interventions, and coordinated financial actions between central banks. He believes silver could absolutely reach prices far above current levels, but investors should avoid becoming trapped by unrealistic timelines. According to him, the journey matters just as much as the destination. Silver markets can remain undervalued for long periods before finally breaking higher. Patience becomes one of the most important qualities for precious metals investors. Another issue discussed in this debate is investor psychology during major bull markets. When prices rise rapidly, emotions often take control. Fear and greed begin driving decisions instead of logic. Many people buy near market tops after hearing sensational headlines, while others panic sell during temporary corrections. Both CEOs agree that education and discipline are critical for long-term success in silver investing. What makes today's environment different is the growing number of factors supporting silver simultaneously. Industrial demand is rising. Government debt continues expanding. Inflation concerns remain elevated. Physical supply challenges are increasing, and global uncertainty appears stronger than it has in many years. Individually, each of these factors matters. Together, they create a situation that many analysts believe could become explosive for silver prices. Whether silver eventually reaches $500 or not, one thing is becoming increasingly clear. The metal is no longer being viewed as a forgotten asset sitting quietly on the sidelines. It is becoming part of a much larger conversation about the future of money, energy, technology, and global economic stability. As this debate between two CEOs continues spreading across the precious metals community, investors everywhere are asking themselves one important question. Are we witnessing the early stages of a historic silver bull market, or are expectations simply becoming too extreme? The truth is that nobody can predict the future with complete certainty. Markets are influenced by countless economic, political, and emotional factors. But what makes this moment so fascinating is that even cautious industry leaders now admit silver appears deeply undervalued compared to the pressures building inside the global economy. The bullish CEO believes the market is dangerously unprepared for what could happen if physical silver shortages become more visible. He argues that once institutional investors, pension funds, and large corporations begin seriously competing for available supply, the price response could shock the world. Because silver is such a small market, even relatively modest capital flows could create dramatic upward moves. The cautious CEO remains more conservative with price targets, but he still sees enormous long-term opportunity. He believes silver could benefit from both industrial expansion and growing distrust in traditional financial systems. However, he continues reminding investors that precious metals markets are highly emotional and extremely volatile. Sharp pullbacks, market manipulation claims, and periods of frustration are all part of the silver investing experience. Both executives ultimately agree on one thing that may matter more than any specific price target. The world is changing rapidly. Debt levels continue growing. Currency purchasing power keeps declining. Technology and energy systems require increasing amounts of silver. At the same time, mining supply faces major limitations. These trends are creating a market environment unlike anything seen in previous decades. For everyday investors, the debate about $500 silver is not only about price. It is really about understanding the bigger picture. Precious metals often act like warning signals for problems developing inside the financial system. Rising interest in silver may reflect growing concerns about inflation, debt, banking stability, and long-term economic confidence. What happens next will likely depend on several key factors. Will inflation remain persistent? Will governments continue printing money aggressively? Will industrial demand outpace mining supply? And perhaps most importantly, will public awareness around silver continue growing? If more investors begin recognizing the strategic importance of silver in both technology and wealth protection, the market could experience a major shift in sentiment over the coming years. One thing is certain: the silver market is attracting more attention than it has in a very long time. Conversations that once sounded extreme are now being discussed openly by serious executives and analysts. Whether silver eventually reaches $100, $200, or even $500, the growing debate itself signals that confidence in the current financial system may already be starting to crack. Thank you for watching Pulse of Silver. If you enjoyed this analysis, make sure to subscribe, like the video, and turn on notifications so you never miss the latest updates from the silver market. Share your thoughts in the comments below. Do you believe $500 silver is possible, or do you think the market is getting ahead of itself? We would love to hear your opinion. This video is created for educational and entertainment purposes only. Nothing discussed in this content should be considered financial, investment, or trading advice. Precious metals markets can be highly volatile, and all investments involve risk. Always do your own research and speak with a qualified financial advisor before making any investment decisions.